we're not really, fintech is not rewriting 100% of finance. Finance exists for 2,000 years, for as long as human exists. What we do is we take certain part, non-efficient parts, or the parts where the customer experience is not the best, and we grapple with the existing, and we just pushing it to where revenue and customer experience will meet.
So what I think it excites me the most is the fact that we don't necessarily need a huge amount of capital to start a company in fintech, in banking, that really makes a difference. And in particular because there's a lot of investment in human capital. And in the end, I think human capital is the most important thing in this type of company. So you can have companies with 5, 6 people with valuation of millions of dollars that wasn't possible 30 years ago.
I would say our systems are designed for the long haul. We are based on resilience, stability, and fintechs could learn from that and capitalize on big systems for more than 10 years and invest in resilience, robust architecture, and also sovereignty.
It's always a hard one, but I would say that there's a French motto saying that America is inventing, China is copying, Europe is regulating, and France is taxing. So I would expect that if America is not inventing anymore, there's probably a place to take for France to invent instead of taxing. So I would expect public institutions to help us doing that.
Well, the capacity for us to be fully regulated by the Banque de France, having direct relationship with the regulator, and still manage to manage risk on a weekly basis, daily basis, while innovating.
I think mostly not just CEOs, but executives across all the banks we work with, and definitely CEOs, they will be very much excited about the fact that cybersecurity can be treated as a business matter and not siloed as a technical aspect when they would work with Capital.
I guess our relationship with compliance, we try to be focused on results and sometimes compliance it's managed after. And this is like a philosophy we have to innovate every day.
Well, definitely agility and velocity in their capacity to track and capture changes.
To simplify payments for merchants with one single API, one single interface, and all the payment services inside. Whereas today it's very difficult for them to get an agile solution.
I would say cover what we do is we quantify cyber risk, we put a dollar value on it, and we attach also probability for specific events. So we are able to look on supply chain events, big events that are impacting industries, specific geographies, cross-correlate between them and see the impact that it might have. I believe that would be interesting.
To manage their services without too much compliancy, more reactivity and more instantaneity.
They will expect their banks to provide full confidence about their data, about their, of course, money that is safeguarded in any case of digital turbulence, no matter what.
Well, that's a very interesting question. If I could pick one, I would say the ability of these banks to use alternative data, for example, assess the credit riskiness of customers. I think traditional banks are quite obsolete at that nowadays. And I think in the end, fintech will just take care of this. And what traditional banks will do is actually to outsource this type of fintechs to precisely rely on their technology to assess these type of things.
I think I intend to continue pursuing a career in banking. Because if I remember my first day in my actual employer, I remember there are a lot of misconceptions that have been dispelled during that days. For example, banks are not so flexible, there are no chance of growing, their technology is outdated, and I was a computer science engineer, so I was choosing with awareness. Actually, I have to say that most of that misconception are not true anymore. If you look at many of the incumbents, they are leading a contributor, for example, in AI patents, and they can do this with a strong execution. driven by a robust governance that makes them resilient and robust, of course, in a volatile market.
I would say I would love the flexibility, agility, and fast decision making and lighter regulation of the fintech. But at the same time, I'd love solid, big network, big balance sheet that allow banks to innovate in products. So I would build a fintech, but I think the best setup is to have it like a spin-off from a bank, to have all the privileges. So maybe entrepreneurship is the key, because I think real impact happen with real investment in solving real problems that takes money, time, and patience. And I don't think it's a normal kind of fintech setup that require a lot of access to players in the market, deep pockets, and at the same time, a good balance sheet. So I would do something in between.
That's a very tricky question, because when we think about how traditional banks, they normally survive in the same environment as fintech, we tend to have a bit of a mixture between competition and cooperation. In particular, of course, you might think back then in the winter, a lot of valuation of these fintechs dropped down. They could be happy because they say their competition was going away. However, we failed to realize that a lot of these banks actually have invested into these fintechs. They have, for example, equity claims on them, they have convertible bonds, they have standard credit lines to them, which normally means that, well, this winter increased the probability of default. So you might think that they were all of them happy. In reality, it was kind of a mixture. However, regarding the spring that we tend to see nowadays, the fact that they are starting to increase valuations, I could say that those banks that managed actually to invest in fintech back then, they might be quite happy right now because they managed to buy companies at a really, really premium. Nowadays, I think they are starting to see this fintech not necessarily as the competition. They tend to find some sort of partnership with them. However, I still think traditional banking has its days counted. Like sooner or later, I think these other companies will take them out.
In my humble opinion, both these sentences are not true at all, because I think in the first phase fintech were undervaluated. Now there is more awareness of their strengths within the ecosystem, and such ecosystem is actually bringing all the value from the actors through a polarization of the partnership that are made up M&As, participation, commercial relationship, whatever. Of course, in this polarization, only the fintechs and the incumbents that are first mover in this journey are succeeding, because fintech on one side need to pursue profitability more than revenue growth, and incumbent need to do a real transformation, a special digital transformation in order to get opportunities. So only the players that already did this can benefit from the ecosystem.
I mean, open source is a real opportunity for us, and we can embrace open source and staying sovereign. That's one of the key points of the sovereignty. It's by utilizing its open source services and technologies. The public service can embrace open source without compromising resilience and sovereignty. So the ANSSI, which is the Agency of Security of Information System in France, are building a list of trusted OSS, which provides us with trusted systems that we can use. So open source is really great. We also rely on sovereign clouds, which are backed by the Secnum Cloud qualification, which is also an ANSSI qualification. The real risk is not technical, it's about adoption. All the good systems, if the adoption doesn't exist, are not reliable and won't be futurist in our organization. So we have to rely on adoption and on building systems that are embraced by our users.
For me, the greatest invention to reduce risk is the Internet of Things, because it should allow to closely monitor the vehicles, the production tools, critical parts of infrastructure, and therefore it should allow to enhance the maintenance of those things and to reduce the risk of failures and the risk of accidents. For the time being, it's limited to large corporates, large factories, but with the development of new networks, it could expand to small and medium companies and being generalized. As regards the coverage of risk, I think there should be no evolution. They should not depart from the partnership relations they have now, because carriers of risk don't have access to the mass market, and on the opposite, insurtech don't have the capital because the private equity fund don't want to mobilize capital. As regards data collection, I think there might be competition because both of them want to extract the maximum value from the data. After the crisis COVID, my response is vaccines based on genetic technology. COVID crisis has learned us that it's a major claim on a global basis, and not only on the life or health side, but with the business interruption, it had also a large impact on the P&C side. Billions and billions of losses. And fortunately, this new technology to produce very quickly and very efficiently efficient vaccines to stop the pandemics offer a great solution to limit the amount of the global claim.
Actually, all our internal control documents and procedures are actually generated by ChatGPT, and make sure that everything is up to date and that we control everything. We just rely on Gen AI. So we've already replaced the junior analysts.
I think and I guess that in the next 5 years, each of us will own its personal agents in travel, in financial, in health, and whatever. Of course, also corporates and banking and banks will do the same. They will have their own agents, and these agents in a sort of AI to AI relation could interact together, of course, with strong guidelines, especially from ethical and moral value, because both people and both banks and corporates should be responsible of the acting of their agents. So I think and I guess that in the future there will be more AI interactions between humans that will be improved by AI and AI agents and corporates.
I'd like to see a machine, not against humans. So it's not the machine is better than the human, but it's the machine augments the human capability. So what I think should happen next is our call centers should leverage this technology to better serve the customers, to have instant responses to customers by Gen AI, by offloading some calls of human agents to virtual assistants that let human agents deal with complex problems, by helping organizations understand from call analytics what the customer really wants, what the customer is feeling while he called, use empathy to see the tone of voice, the language that the customer use, and to really understand the customer. I think the best setup is to leverage technology like ChatGPT embedded in the core of the call center to let the customer get the best service. We should leverage machines to serve bigger customers in a better quality and with better cost efficiency. This is what the future should look like. I think Web3 is a new wave of transformation for the financial system, but it all depends on the use case. So it started as a hype that all the banks started to put a virtual bank in Web3, like digital ecosystems and virtual ecosystems like games, etc. But I think this hype has faded, and now banks are focusing on what business problems can Web3, like smart contracts and stable coins, and these kind of moves that banks can do in Web3 rather than the basic use of crypto, which is disintermediating banks and the regulators. I think banks has a role to play. Days will show us how effective this role is and how real this transformation. But I think it's shifting now. I still didn't see any commercially viable use case that banks can do today. But I think it's happening soon as we go into more financial use cases, especially in trade, remittances, contracts, especially in the derivatives part and the structured products part. I think it can happen. I'm not sure when and where in the world, but I'll be very curious to see it happening with any use case picking up.